Vayalil Capital. The market took a breather in the week that ended on October 16 with the benchmark indices losing 1.3% after witnessing gains in the previous 2 weeks in a row. Rising COVID-19 infections in some European nations, delay in US stimulus, lower than expected domestic stimulus package and adjournment of the SE verdict on moratorium dented sentiment. The BSE Sensex closed the week below 40,000 mark, down 526.51 points at 39,982.98, while the Nifty 50 failed to hold on to psychological 12,000 mark, falling 151.75 points to 11,762.45. The broader markets too were under pressure with the Nifty Midcap index falling 1.8%. Experts feel the market may remain range-bound till the US presidential elections in the first week of November, and all eyes will remain on second quarter earnings season. The COVID-19 updates and the global cues, while visible green shoots, may continue to provide the support to the market. The markets are expected to witness a sectoral rotation and are likely to trade in a narrow range. Investors may also witness the profit booking at higher levels and are advised to keep calm and wait for a serious correction before investing. We suggest the traders to avoid overbought stocks, and oversold stocks can be considered for the medium-term upside. On Monday, the market will first react to HDFC's bank quarterly earnings. Here are some key factors that will keep the traders busy next week. That is earnings. The September quarter earnings remains a key to watch out for, as 171 companies will declare their quarterly scorecard in the coming week. Hindustan Unilever, Asian Paints, Bajaj Auto, ACC, Nestle India, Britannia Industries, Yes Bank, Tech Mahindra, CSB Bank, HDFC Life Insurance Company, L&T Technology Services, Larsen and Turbo Infotech, Bajaj Finance, Colgate Palmolive, JK Tyre, Ultratech Cement, Alembic Pharmaceuticals, Biocon, HDFC Asset Management Company, Bharati Infratel, L&T Finance Holdings, SBI Cards and Payment Services, ICICI Lombard General Insurance Company, IDBI Bank, Persistent Systems and Rosari Biotech, among others, are the prominent ones to look at. The HUL, Britannia, Nestle and Asian Paints. Earnings from consumer staples including the Hindustan Unilever, Britannia Industries, Nestle and Asian Paints and their demand estimates will show the reality of consumption happenings in the economy. Demand estimates by the management of companies after Q2 earnings will be a good indicator of recovery in the formal economy. Most of brokerages expect the demand recovery in this segment given the openings of economy from the lockdown. Hence, the volumes and top line of above-mentioned companies may be better than previous quarter. Kotak Institutional Equities feels HUL may report 2.7% growth in organic revenue in the domestic FMCG business with improvement across segments, while Britannia could continue to benefit from increase in home consumption with strong 12% YOY growth in biscuits volumes. The Nestle India is expected to report 2.5% growth in domestic, while the Asian Paints may also see around 2% consolidated growth in Q2 sales, led by pickup in domestic business against a significant fall in June quarter. The next one is the coronavirus risk. The increasing recovery rate, improving fatality rate and fall in active case count below 8 lakh mark after 1.5 months continue to support the market. So far, India reported more than 75 lakh infections with over 1.13 lakh deaths so far. The recovery rate is nearly 88% with fatality rate around 1.5% as on October 16 against 85.8% and 1.53 to 1.54% respectively last week. But globally, the markets were worried after the news of the second wave of COVID-19 infections in European nations, and as a result, several countries including the UK and Germany put strict restrictions to reduce the sudden resurgence of the COVID-19 pandemic. Given the several vaccines are at phase 2 and phase 3 of clinical trials, experts are hopeful for the vaccine in the first quarter of CY 2021. Next one is the FII and GII flow. The FIIs continue to be net buyers in October, which could be one of the supporting factors for the market, though GIIs remain on the sell side so far in current month. The FIIs have net bought of rupees 1,185.51 crore worth of shares in the past week, in addition to net buying of rupees 3,371.26 crore in previous week. On the contrary, the domestic institutional investors have net sold of rupees 5,217.47 crore worth of shares in 5 trading sessions of this week, on top of rupees 2,389.43 crore of selling. The next one is the IPO. The Equity Small Finance Bank will open its initial public offering for subscriptions for 3 days on October 20 with a price band of rupees 32 to 33 per share. This would be 12th public issue of this calendar year. The company is going to raise rupees 517.6 crore via public issue, which consists of fresh issue of rupees 280 crore and an offer for sale of 7.2 crore equity shares by the promoter Equitas Holdings to comply with RBI's listing norms. The next one, let's check about the technical view. The Nifty 50 gained 82 points on Friday and formed small body bullish candle which resemble a bullish Hermite pattern on the daily charts, which is generally considered as a bullish reversal pattern. However, it lost 1.3% for the week and formed a bearish candle on the weekly charts. As long as the Nifty trade above 11,650 levels, we can expect a pullback towards 11,900 to 12,000 levels. On the contrary, if Nifty slips below 11,650, then further selling pressure towards 11,550 can't be ruled out. Technically, the overall structure is hinting at a broader consolidation in the range of 11,650 to 12,000. The momentum indicators and oscillators are very well in the buy mode on the daily scale as well as weekly scale, which indicates that the short-term trend is still positive. The next one is the F&O cues. The overall option data indicated that the Nifty could remain in a broader range of 11,600 to 12,000 in the coming week. While the volatility is expected to increase in coming weeks given the US presidential elections in November, but that could not go beyond 24 on the India VIX experts feel. The put writing was seen at 11,600 and 11,700 strikes, with the second highest open interest is placed at 11,700 strike, which is likely to act as immediate support in the coming week, followed by 11,600. On the call side, a fresh edition was seen at 11,800, 11,900 and 12,000 strikes, where the maximum open interest is placed at 12,000 strike of more than 32 lakhs contracts. Hence, the experts feel the Nifty can expect the short covering towards 12,000 mark if the index sustains 11,800 levels. For the coming weekly settlement, the Nifty has highest put base at 11,700 strike, while call base is placed at 12,000 strike. Hence, the Nifty should find immediate support near the current levels of 11,700 below, which a fresh round of weakness can be expected towards 11,400. However, we expect the Nifty to consolidate about 11,700 due to ongoing result season amid stock-specific movements. Now, let's check about the economic data points. Deposit and the bank loan growth for the fortnight ended October 9 as well as the foreign exchange reserves for week ended October 16 will be released on Friday. The credit growth in India has been more than 5% for the last few months but has declined from 7.2% seen in April, especially after lockdown. While the deposit growth for last 6 months on an average has been more than 10.5%. Foreign exchange reserves for the week ended October 9 came in at a record high of $551.50 billion, increasing by $5.86 billion during this week, the RBI data showed. So that's all for today. I'm winding up today. So all of you, please don't forget to subscribe our channel and please don't forget to share it with your friends and relatives. Everybody, please stay home, stay safe and stay healthy. Thank you.